My sense is that I remain positive on the market outlook. My sense is that 25,000 Nifty is something like anything from 10 to 15 months away. So in that sense, we remain positive on the broad positive on the Indian equity market. Now, obviously, if you look at the significant outperformance of mid cap and especially small cap in the recent past, this is more of a catch-up rally. If you look at from 2018, for major part of the rally in the large cap was missed out by the mid cap and small cap. So this is more of a catch-up rally, and on the top of that, if you look at the earnings growth of the mid cap and small cap, say the CAGR of earning growth for large cap is somewhere close to 13% since 2018. As opposed to that for mid cap, it's about 21%. As opposed to that for small cap, it's about 43%. So this is coming at the back of a very strong earnings growth. And even if you look at the valuations on a trailing PE basis, mid cap and small cap are looking for better value than the large cap at this point of time. Having said that, to maintain this rally, both mid cap and large cap has to deliver very robust earning growth. For mid cap, at least around 20% earnings growth, and for small cap, even higher earnings growth is required to continue this rally at this pace. So that if that doesn't happen, then there is obviously a risk. But as you say, in the equity market, you cannot time the market. So while there are risks, while there are possibilities of market going down, while there are possibilities that returns coming down, but over the medium to longer term, you make better money on a risk-adjusted basis in the equity market, and obviously small caps does better than mid cap and large cap. So from that perspective, we remain positive on the mid cap and small cap over the medium term perspective, though a near term dip in return for these cannot be ruled out.
So, and on the valuation, we generally look at three parameters. So how are we faring currently on those three parameters?
In terms of valuation, as I said, on a trailing basis, if you look at, then all the segments of the markets would look a bit overrated. But if you look at the froth, there is actually still a negative froth for the small cap. That means small caps still have some space to go up. Mid cap, there is some amount of it's more or less fairly valued on the basis of forward expectation. And for large cap, there can be a marginal amount of froth there. But having said that, it all depends on the earnings, and from that perspective, what happens is the bigger point.